Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into a Duke Energy filing that, while seemingly about a simple credit line increase, actually reveals quite a bit about their long-term strategy. Think of it as Duke Energy getting a bigger wallet, but what are they planning to buy? Let's find out. A scrolls of report date of earliest event reported, Duke March 14, 2025 scroll. Tease is a Form 8K filing, which is basically a corporate breaking news report. The date to pay attention to here is March 14, 2025, because that's when the event being reported happened. This tells us that this is the date that Duke Energy agreed to some changes with its lenders. Before we dive into the details, let's quickly clarify who we're talking about. This filing involves Duke Energy Corporation, which is the main company, and several of its smaller companies or subsidiaries like Duke Energy Carolinas, Duke Energy Florida, and others. These subsidiaries operate in different regions and are all part of the larger Duke Energy family. Think of Duke Energy family, 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 think of Duke Energy families, Duke Energy Florida, and others. These subsidiaries operate in different regions and are all part of the larger Duke Energy family. Think of Duke Energy Corp as the parent company and the others as its kids, all living under the same roof. So what's the big news? Duke Energy and its subsidiaries entered into something called an Amendment 2 and consent. This is basically a fancy way of saying they changed the terms of their existing credit agreement. The original agreement is like a promise from a group of banks to lend Duke Energy money when they need it. This amendment or change updates that promise from a group of banks to lend Duke Energy money when they need it. This amendment or change updates that promise. They had a similar credit agreement in place since 2022. The important takeaway here is that these types of credit agreements are essential for large companies like Duke Energy. They act like a corporate credit card, giving the company access to funds for day-to-day operations, investments, or unexpected expenses. Here's the heart of the matter. The first major change is that Duke Energy increased its credit line from $9 billion to $10 billion. That's a significant jump. Think of it as getting a $1 billion raise on your credit limit. The second key change is extending the credit facility's termination date. Originally, this credit line was set to expire in March of 2029, but now it's been pushed back to March of 2030. Extending the termination date gives Duke Energy more time and flexibility to use this credit line, signaling their confidence in future projects and investments. If you want to see the exact legal language, you can check out Exhibit 10.1, which is the actual amendment document attached to this filing. However, be warned, it's dense legal jargon. So what does all of this mean? Duke Energy is basically preparing for something big. Increasing their credit line by $1 billion and extending the agreement shows they anticipate needing more financial flexibility in the coming years. This could be for funding new projects, upgrading existing infrastructure, or even making acquisitions. Now let's step back and look at the bigger picture. Duke Energy is one of the largest energy holding companies in the United States, providing electricity and natural gas to millions of customers. The energy industry is undergoing a massive transformation, with a growing emphasis on renewable energy sources and cleaner energy production. Duke Energy is investing heavily in renewable energy projects like solar and wind farms. They're also working on modernizing their existing infrastructure to make it more efficient and reliable. This credit line increase could be directly tied to these initiatives, giving them the financial muscle to execute their long-term plans. However, it's also important to consider the risks. The energy industry is subject to a lot of regulation and policy changes which can impact Duke Energy's profitability. Rising interest rates could also make it more expensive for them to borrow money, potentially squeezing their profit margins. From my perspective, this credit agreement amendment is a positive sign for Duke Energy. It demonstrates that they're proactively managing their finances and preparing for future growth opportunities. The increase in their credit line signals that they have ambitious plans, likely related to renewable energy investments and infrastructure upgrades. The company seems to be solid at the moment, but the significant debt level means there's less room to make mistakes, especially with unpredictable regulation and high interest rates. In conclusion, this seemingly minor filing about a credit line increase actually reveals a lot about Duke Energy's strategic direction. They're positioning themselves to be a major player in the evolving energy landscape, and this increased financial flexibility will be crucial for achieving their goals. Thanks for watching this episode of Corporate Decoder. If you found this helpful, please like, comment, and subscribe for more insights into the world of corporate filings. Let me know what company you'd like to see me decode next.